In today's video, we would like to discuss economic data and market reactions. The two significant parts of economic data that we received yesterday came in the form of European inflation and also US manufacturing data. So if we start with Europe first, the inflation data that was released showed that headline inflation in Europe has fallen down to 1.8% from last month's 2.2%. Now, what we think is significant about that is it's the first of the major central banks out of Europe, UK and the US to see inflation fall below their target, which is about 2%. So this will be positive for the ECB and give them more confidence that they can cut rates, knowing that the inflation battle has been won within Europe. If we move on to the US and look at some of the manufacturing data in the form of the ISM manufacturing PMI. Now, what that data showed us was that the headline level of manufacturing activity didn't really move that significantly, about the same as it was last month. And that figure is still below the 50 mark, which means that the sector is still in contraction. However, when we look at some of the underlying components that build up that number, we can see some more changes. So if we start with the negative first, that's that employment has moved further lower. Now, we should expect that given that we know manufacturing has been weaker than the services sector within the US and also on a more global picture. But where we're starting to see more positive data is within the prices paid component and also the new orders component. So the prices paid component, that's moved lower. That will once again give the Fed more confidence that inflation within the US is coming back towards their target and give them more confidence that they can cut interest rates without worrying about inflation moving higher. If we look at the new orders component, that's moved higher. So we're seeing businesses do more deals. What is positive about that is it will add more good news to the narrative that the Fed can cut interest rates without the US economy going into recession. Now, this type of financial data would usually be quite significant for markets and they would have a focus on that. However, what dominated headlines yesterday was the conflict that we are seeing within the Middle East. And that meant markets moved more defensively. So we saw equity markets sell off and investors pivot towards sovereign bond markets where yields moved down, meaning the price of the bonds had moved higher. We also seen things like within commodity markets, oil move higher by about 3%. And that's just because supply for oil could become restricted if the conflict escalates further. However, what we believe is important to take away from this is it highlights the importance of being diversified and how a multi-asset portfolio can offer investors utility where equities are selling off. We get a bit of a cushion from how the fixed income assets in the portfolio have reacted to the news. So thank you for watching today's episode and we'll catch you in tomorrow's video.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.